Hi, this is Zach Mir with the Bulletin Board Heroes on Wednesday, the 16th of May. Starting off with EBR Holdings, and the rug pull at the beginning of the month seems to have got the stock settled down near the 50-day moving average. That's the blue line there at 13.38 pence. We had a setback before at the beginning of April, where we bounced just above the 50-day line, which was a bull signal in its own right, especially with the unfilled gap there. Situation now is that probably one would either be waiting for a break of 14 pence just above the current consolidation and a break back above RSI 50 versus 45 at the moment, or if you are more cautious, maybe wait for a possible decline back towards the floor of this rising trend channel from early last year at 10 to 11 pence. At the moment, it doesn't look as though the stock will go back that far, but obviously it pays to be cautious given the pullback that we've had over the last week or so. Best case scenario is we break back above 14 pence by the end of this week or early next week and head back towards the top of the channel, 19-20 pence over the following month or so. Next up, a stock which has been in the news earlier this week with a positive fundamental aspect. Situation now is that we've broken out of the recent consolidation, 2.5 to 3.5 pence, and a decent bull flag as well. Ideal scenario here is that we head towards the top of a rising trend channel from the end of last year, heading towards 7 pence over the next couple of months, and that target would be valid while we remain above 3.5 pence, the former resistance in April and earlier this month. Going on to something rather more oily, JKX Oil and Gas, and here we've had decent push higher over recent weeks, breaking that February resistance around 27 pence to start May. Situation at the moment is that we're in a wide rising trend channel from the early part of last year, and the view is that at least, well, basically while we're holding above that old February high, the upside should start to accelerate. Favoured destination at this point is a move towards 50 pence over the next 2 to 3 months, especially if we can get a decent push through 35 pence, which was basically the early resistance of last year over the next couple of weeks. Going on to a smaller situation, one which I've been following on a fundamental basis, but the chart actually looks rather good as well. One Media Group. Here we've got the big push higher through the 50-day moving average in December with a bit of a volume spike as well. Call that rocket launcher going through the 50-day line and remaining unfilled in terms of that gap. Then basically a sideways move consolidating above the previous resistance around just under 7 pence. And it looks as though now we're going to get a decent break to the upside. In fact, you could argue that it's already got underway with a break through the 50-day moving average, 8.9 pence, and that line of resistance from December. Favoured scenario here is a move towards 17 pence over the next 1 to 2 months, only back below 8 pence, really questioning the bull scenario. RSI rather overbought at 89, so might let it cool off a little bit before getting involved. Back to the oil area and Premier Oil. It was always a bit of a surprise for me the way that the shares didn't really take off after last year's big good news. I think there was a big find there for the company, but it looks as though with the oil price rising, people are finally getting back into this situation. We've broken back above last year, well, the initial high of the year, which was around 104, 105 pence, and while we remain above that, the target here is the top of a wide rising trend channel from early 2016 as high as 140 pence. This stage only really back, but well below the 100 pence level would ring any alarm bells for this situation. Another stock which has been on the up and with a very strong chart as well is Regal Petroleum. Obviously, we had that vertical move through 10 to 15 pence at the beginning of the year. Very good consolidation, largely above that. So that spike there around 15, 16 pence has basically been new support. The view now is that it looks as though the shares are ready for a new leg to the upside, especially while they hold the 20 pence support line from December. Best case scenario target here up to 35 pence plus over the next 1 to 2 months for Regal, especially if we can hold above the 50-day moving average at the end of this week. That's at 21.31 pence. Finishing off with a less happy situation, or at least a rather more problematic situation. You remember that initially looked at the stock when it was around 84, 85 pence. The view then at that time was that the shares should have kept on going, but if you were cautious, you'd wait for a break of that resistance line there at 87 pence. That was never broken, and we gapped down through the 50-day line at 73 pence and actually briefly touched the 200-day line at 55 pence on Trump-Iran news. But there has been good news on the technical front since then. That was just a one intraday touch of the 200-day line at 55, and really the natural support here is back at 60 pence at the floor of this falling December trend channel. While we're above that, you would be right to assume this stock is in recovery mode, and we could be looking at a bottom fishing situation. Once again, the 50-day line in play, in the sense that if you are cautious, it might be better to wait for that to be broken rather than trying to catch what has been a falling knife over the last few sessions. That's it from me. More updates later in the week.